Hi friends, have you been hearing conflicting information about the housing market, house prices, and interest rates? If so, this video is for you. Hi, my name is Brandie Jones with the Kingdom Realty Team with Keller Williams SELA. Now, we've had higher mortgage rates for quite a while. Inventory has improved in certain parts of the country and definitely here in SoCal. And buyers aren't bidding aggressively the way they were 2 or 3 years ago. So it makes sense that a lot of people are thinking, okay, this has to be the year prices finally fall. But once you step back from the noise and focus on the numbers, the situation isn't as simple as it seems. Yes, the market has shifted. Yes, things have cooled from the frenzy we experienced. But cooling off and coming down are two very different things. So today, let's look at what the numbers are actually saying and what that means for you if you're looking to buy or sell in 2026. Now, this video contains no drama, no fear-based predictions, just data and perspective. First, let's discuss what the national data is actually telling us. The Federal Housing Finance Agency, or FHFA, which I can never say without stuttering, releases a quarterly house price index that tracks home values across the country. In its most recent report for Q1 2026, prices are still up compared to the same time last year. The growth rate, it is much slower than what we saw during the pandemic surge, but it's still positive. Now, let's look at Zillow. Zillow's home value index also shows that U.S. home values are slightly higher than they were a year ago. Again, we're talking about modest growth, not dramatic or overheated, but not negative territory either. Then we have Redfin, 2026 housing forecast. Redfin is projecting roughly 1% price growth nationally this year. It's steady and measured, and it lines up with what we're seeing in other reports. That's a very different environment from 2021, and it's also different from the collapse we saw in 2008. So when you step back and look at the broader picture, the pattern is consistent. Growth has cooled, things are more balanced, but prices aren't falling nationally. Here's why it may seem like or feel like prices should be falling. First off, the higher mortgage rates cool demand. This is true. But they also lock many homeowners in low mortgage rates, right? From a few years ago. They had gotten 3% interest rates. And so if they sell, they'll be giving up that 3% rate for a 6 or 7% rate. And that sounds a little bit cray-cray. Supply never surged the way some expected. In many markets, we're still dealing with relatively tight inventory, especially in places like Orange County. Not extreme shortages like before, but not oversupply either. That balance is what's holding prices steady. Now, what could happen in the rest of 2026? Looking ahead, most forecasts remain conservative and steady. Redfin expects about 1% growth nationally this year. Zillow anticipates modest appreciation as well, and the FHFA's data continues to show year-over-year gains. Again, slow gains. When several independent reports show the same trend, it doesn't mean every city is experiencing the exact same conditions. Local conditions can vary depending on inventory levels, job growth, and buyer demand in that area. But nationally, the data does not support the idea of a broad housing downturn. What we're seeing is normalization. The market has shifted from rapid acceleration to a steadier pace, and that's actually healthier for the long term. So now, what does that mean for buyers? If you're waiting for a dramatic drop in home prices, the data suggests that may not be the most likely outcome. However, buyers today have advantages that did not exist a few years ago. Less bidding competition, more inventory choices, more negotiation flexibility. In other words, you may not see lower prices, but you may see better terms. And in many cases, that can have just as much impact on your overall investment. Now, what does this mean for sellers? For sellers, this is no longer a name your price market. Pricing strategy, presentation, and preparation matter. Buyers are comparing more carefully now. They have options. That means positioning is everything. The sellers who win in this market are the ones who price realistically from the start and present their homes in a way that stands out. So, are home prices finally coming down in 2026? Nationally, the data says no. What we're seeing instead is stabilization. The rapid run-up we've experienced a few years ago has leveled off, but broad price declines just aren't showing up in the national numbers. If you're wondering what this means for your home's value or buying power, let's take a closer look at your specific market. You can reach out to schedule a one-on-one strategy call, and we'll build a plan that makes sense for you. If you found this breakdown helpful, make sure you like and subscribe so you don't miss future market updates and practical real estate insights. Thank you for watching and have a blessed day.